Top of mind for a lot of folks in the market today, I think, is what Vice President Joe Biden put out in terms of his economic revival plan if he does win the presidency. In your view, are you inclined to sell stocks just based on what his plan entails, most specifically raising taxes?
Well, certainly, and good morning, by the way, thanks for having me. Certainly, Biden's tax plan, is a headwind for the market. I estimate that if the corporate tax rate goes up, it could bring down S&P 500 earnings by about 10%. The market is overbought for a lot of reasons. Politics is one headwind. Clearly, what's happening with COVID, the cases spiking and the states kind of bumbling with this reopen plan. I mean, there's a lot of negatives going on. I think the tax issue with Biden is just one.
Hey, Allan, would you go as far as to say that Trump is the more Wall Street friendly candidate out of the two?
Well, the challenge is, you can't only look at economics, right? Like there's so many other factors with Trump that also impact the market. And so, he's been good on corporate taxes, yes. But a lot of the other issues that Trump has created are also kind of bad for the market. Like one thing in particular is, we've pumped a lot of stimulus into the economy, over $2 trillion since the pandemic hit. We also had a huge tax cut for almost no reason. There's really nothing going on where the economy needed stimulus. And now we're at a point where our debt is just ballooning. And so there will be a point in the future where the world's not willing to finance the U.S. at 10 for the 10-year treasury at 0.65%. And so these are longer term issues that need to be dealt with.
Allan, you said a moment ago you think the market is overbought for a number of different reasons, but is this market really factoring in and pricing in election results, or have investors been largely ignoring it, and when should they stop ignoring it?
Yeah, I think the market is really, again, when you see, we had a relatively good unemployment number today. I think the market on days when the numbers are bad, when, we've had a lot of bad headlines around coronavirus, I think the market's kind of cheering on the expectation of more stimulus, and this stimulus would happen before the election. And so I think there's a lot of optimism related to more stimulus, and the more bad news we get, the higher likelihood there is that we'll get more stimulus. One of the things that's coming up is the unemployment, the $600 a week that's part of the CARES Act. It's going to run out at the end of July. And so it's expected that will be they'll add some more money to that budget, extend those benefits, and more stimulus to follow. And I think a lot of these issues are causing the market to react.
Allan, if that stimulus plan is not re-upped at the end of this month, do you think we could see a correction?
Oh, absolutely. Absolutely. I think it's priced in already. This stimulus, this round two is already priced into the market. And if it doesn't happen, there's going to be massive disappointment. So absolutely.
Would love to get your thoughts on a couple of individual stocks right now. We've been talking for the past almost 2 weeks now about how the FANGs have absolutely been on fire. And within those names, you really like Netflix, which we know has sort of been the stay-at-home pandemic trade, if you will, and Google. Tell us why.
Yeah, so for a number of reasons, starting with Google, they're in a lot of different businesses that are kind of COVID neutral to COVID positive. Well, I guess that's a play on words, meaning I'm really interested in businesses that will do well in a post-COVID world. And so Google, they're in ads, they're in search, they're in entertainment through YouTube, they're in mobile, they're in cloud computing, they're in enterprise cloud, they're in so many different businesses that, again, none of these are going to be negatively impacted in a post-COVID world. Additionally, I also like their social stances. Google recently devoted $175 million towards racial equity initiatives. And that stuff really matters in today's climate. You look at Facebook, which is one of the FANGs, they've been absolutely beaten up by, folks in the civil rights community and folks who are just concerned about how they deal with privacy and how they police their platform. So I think these ESG factors, these environmental and in particular social issues really matter a lot today.
Allan, Ines here. What are the sectors that you would stay away from? For example, travel has been heavily impacted by COVID-19. United Airlines has announced that 36,000 employees may be impacted with their jobs starting in October. Would you buy into those sectors, or would you stay away from them?
Sure. So with regards to sectors I don't like, number one, it's going to be the financials. It's the banks. I think that the retail sector is going to be very, very, compromised by this. You're seeing bankruptcies. You're seeing store closures. Well, guess what? The banks have issued a lot of commercial mortgages, and these mortgages will not be paid, and they won't be paid on time. And the banks really have a lot of the downside related to what's going on with COVID. So I'd avoid the banks. I also don't like energy. I think, again, consumption is going to be low, given that everyone's still staying at home. And as the states open up, I do think that consumption and demand is going to remain low. So I'd avoid the banks. I'd avoid energy. And then with regards to airlines, I mean, you really, at this point, I expect that there's going to be a major carrier that goes under. Right. And it's not just a matter of looking for value. Like, there's going to be some absolute destruction in those spaces. And I'm a value investor, but I also know that, today you can't just look at valuation as a metric. You also have to think about whether this company is going to survive or not. And I think within the airline space, there's going to be a lot of companies that don't make it, or at least one major company that doesn't make it.
We hate to procrastinate here, but any idea on who might that be? Any big name carriers you think might not survive?
Yeah, I don't want to speculate. I just know, again, when you think about retail, just changing subjects for a minute, we've had some really blue chip marquee names that are doing things like closing stores and filing for bankruptcy. And, the CARES Act definitely pumped a lot of capital towards the airlines. But, airlines are a very capital intensive business, and, they're funding themselves with government money as well as in the debt market and in the equity market. And I just don't see a friendly environment for the public markets funding these businesses forever.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.